Good morning and welcome to the early bird. And here we're looking at the Dow Jones on a daily chart. And I don't have Friday's bar in here just yet, but it would be something like this here, just a small range here. But what I wanted to talk about here was this particular low point through here. And as a wave 5 coming down through here, we would be looking at a movement coming through like this. And some of the leading markets at the moment, this is obviously the Dow Jones, but when we look at the Dow transports, we can see that that's already moved through here. There's not many markets that have moved through their lows yet, but we certainly expect that because the Dow transports, which is one of the leaders in that, as you can see through here, has taken its lows out, and this Friday's bar is not in here as well. But the point being is it's taken this low out here. Some of the Asian markets haven't done that. The Shanghai that we normally follow, hasn't done that, or the Shenzhen. But we are seeing it in terms from India, in terms of its movement down through here. And once again, you can see quite a nice 5-wave structure coming through here. So a leading market through here in terms of 1, 2, 3, 4, and 5. I think this is just part of the third wave, though, in terms of down for 1 and back for 2, and then the third wave, the 1, the 2, the 3, the 4, and the 5 here. There's still the 4 and the 5 to go here, but well, basically there's just a few leading markets taking out the lows there, and that's normally a good indicator that the other markets will follow. So when we're looking at the Shanghai and the Shenzhen market here, the Shanghai here to start with here, you can see that it hasn't taken its low out here, and some of these markets like ours in the US, some of them had quite big pullbacks back up here as sort of wave 4s here, but we understood that they would roll over at some point, and that's what we're seeing now. And so we expect these to take out, and this would also be the same on other markets as well. So just sort of focusing in on that a little bit here on the 30-minute chart of the US 30, the Dow, we can see that this is the low that we're talking about here. So we'd expect that to be taken out, and it's just a matter of time. So yeah, the 11,500 that we were working with up through here for the wave 4 is finished. So we're looking for the wave 5 to come down through here, and we'll be looking at 5 waves there. So we'll be looking at basically in brackets down for 1 here, because we've had 5 little waves coming down through here, and I want to talk about this a little bit more in a moment, but basically down for the 1, back for the 2, and down for the 3, the 4, and the 5, with the magnet of 10,000 pulling the market in that sort of direction there. So in terms of looking at this a little bit closer here, there's it's a little bit, there's just a couple of options that can sort of happen through here, and this is sort of one option here in terms of down for 1, back for 2, 3, 4, and down for 5 here to make wave 1. We've come back for wave 2, but wave 2 may not be finished yet, in terms that this wave 1 here could actually be over here, and this could be a whole 4th wave through here in terms of an A and a B and a C wave up to here for the wave 4, then wave 5 down here. So this little guy here could be over here, and we could get that pushed back to there. But I would suggest from this area here, we should see a retest back to the 1,000, the 11,000 here. I was thinking of the S&P 500 there for a moment, but back into here and then back down. So we're going down. It's just a matter of how it pans out there, and this would be the same for the S&P 500. So the S&P 500, I've just sort of allowed it here. This wave of this wave 1 here could be the wave 1 here, and so forth. So, but basically the 1, 2, 3, either 4 to here and 5 to here, and then we go back up to here, 61.8%, and also the trend line through here with the support, the supply would be from before, technical resistance rather, and then down from that point for wave 3 coming down. So I think what we could sort of expect in reality, if the if the on the S&P 500 here, as in terms of trading, if the top of group 1 here, 10, 20 and 30, on top of the 30 here, if the 30 finds support here, then we can expect a retest back up there and then down from there. If this market drifts down and locks under the 20 here, the 1120 here, then we can expect it to come down to the 11,000. So from the 11,000, we should expect some sort of bounce back up. And we'll see how that travels. Now, wherever it goes to, that's fine. Then we'll look to short that from either back up here, or the other side of the coin is that at the 11,000 here, if the resistance comes in here and it can't get back up through the 11,000, then we'll be looking at the wave 3 to the downside. So on all markets, we just need to get a better grip of this. I'll have a look at this over the weekend and pull it apart much further and sort of line it up with some other markets as well. The UK's the same situation as well. It's a 30-minute chart here, but we've had that wave 4 come back up, and we're looking for the first wave structure coming down through here. The idea here, though, would be to have the 5,000 as a retested resistance, and that's not just there yet. So we need to see that play out there. But, you know, if you're trading this market, you know all the sub-levels and the main levels there. So just line this up with the S&P 500, and we'll be doing some more work on this. So this could certainly be the five waves down to this point here in the wave 4 and down for wave 5. We just need another retest from under here to make sure that it's locked in there, but I'll do some more work on that. And it's the same, pretty much the same with our local market as well. This is the cash market here, so to speak, but it turns onto the futures markets in after hours. But basically down for 1 and back for 2, down for 3, across for 4 and down for 5 for wave 1, and then back for wave 2 here. But I don't know if this wave 2 is complete yet. It may be just the A, the B and the C wave coming back up here, and then we go down. I'll just come over to the futures market for that assumption there, because this is what we were looking at yesterday. Yesterday we were drawing from wave 4 here. We're looking at wave 5 to come down, and then an A, B, C to come back up for wave 2 here. So wave 2 here may not be complete. This wave 1 here, that could be fine, but this could just be the A, the B and the C wave back up to here. So this is kind of lining that up with the US markets. We just don't know how this correction is going to pan out, but what we can do is we can use the levels to get a bit closer to the situation. So here's the 4,000 through here, and you'd need to have all the little sub-levels in here from 4,000 to 4,001 if you're going to be trading that. But we should expect a bounce off the 4,000. I mean, this strong move coming down here is fine, but all this sort of correctional stuff here is a sign that it's like a ball bouncing on the floor, just gets lower and lower and lower. So this is a slowing down through here. So we should expect a bounce. We need to be prepared for a bounce anyway, but we'll trade the levels. But we'll expect the bounce to come off the 4,000. But the bigger picture is still to the downside. Because we've got 5 waves down here, it does mean that we're going to get another 5. So we are bearish, and we have been, and yeah, we're through it. We've just got to get through this little bounce here, and we'll be spending some time on that. Now, the drivers, we start with the gold, if you like, the fear indicator, if you like. I thought we would have had a pullback from here into the 18 here, and that's sort of not the case, and we're not going to get one from here either, because we've got this, a bit hard to see in there, we've got this 3-wave correction in here, so we'll be working from the midpoint within here. So this A, B, C in here for wave 4, but wave 4 may not be finished. This may just be the A here, the B here, and the C here. So, but it should, in essence, it should stay above this this 1830 here, the top of subgroup 1, 10, 20, and 30. It should stay above there. We've got 2 trend lines coming through here and supporting it. One from down the bottom down through here, coming through here, and then a sharper one coming in through here. But just the structure of the wave count, it should stay above the 1830 there. and push up there. And we'll be looking for a wave 5 up. So we're looking, once this is complete here, and it may be complete here, if it finds support on 1850 and it's nice and solid, then you can look to go to the upside there. But you know it's going to get hit at subgroup 2 here, 65, 72 and the 80. But if the 72 becomes support, then you can trade it from the upside, continue to trade it from the upside there. But we're looking for 5 waves up from here, or over here, or over here somewhere. So I'll be looking to count those 5 waves up to the 1900 there. The oil market, oil follows stock, and everything's pretty much on cue here. This is a 4-hour chart. I just wanted to show this here because we've got the 5 wave structure down through here, and then we're looking for a rally back up through here, hitting 88, profit-taking numbers. We're aware of that. We're also aware of diminishing volume coming up through here. So we knew that it wouldn't last long, and 88 was or 90, but it locked under 88. So look, what we've got down through here is we've got 5 small waves coming from this point down to this point, and this is what we were talking about last week. And we've got that, you'll see that on the charts anyway. We've got 5 waves down here, so we're looking for a pullback and then further to the downside. So 5 waves down here, 61.8 retracement level perhaps, but we'll look at 83 and 85 here, the minor trading levels. That's where the supply will start in, just depending on where the sellers have moved down from. The people that bought up here, they'll be chasing the market down here. So I'm quite sure they'll be thinking of 85, so we shouldn't see it go above 85, and 83 is probably the case there as well. But if you've been trading it short from up here, the object was to lock under 80 here and add to those positions here. If you're a shorter term trader from the 88 or the 85 here, what you're looking for here is the market to come down and lock under the 80 there, so you can add on that there. I wonder if I can just put this on a smaller time frame here. It's after hours, so it's not probably loading off the server that well. There we go. So look, from the 88 here, we can see that we've got this nice strong wave structure down here. This is the 3rd wave coming down, the 4th and the 5th here. So we're looking for an ABC correction back up. If it finds support on top of the 83 here, then it'll go to the 85, and we know that there's resistance from over there with that. But technically, the go is looking at 61.8 retracement level back to here. So it is in this vicinity here, and this is where the supply is. So we'll see how we go with that, but it can certainly roll over from there. So shorting it from the 82.72 there as a resistance would be the first leg in there. Then once it locks under the 82, then to add to it there, but it could push higher through there. So we'll just be careful about how you go there, and finding support on top of group one, which would be minor group 1, 81, 82 and 83. If it finds support on top of 83 or the top of any group 1, subgroup 1 or minor group 1, then it'll push higher through there, because traders tend to forget about the closest largest number here and would look to the midpoint, the 85 there. But this market will follow stock as normal, and the copper market as well, pretty much the same. This was the sort of wave 4 that we'd seen on stock, and yeah, so we're looking for this to come further down. So we're looking at 5 waves down to this point here, and we're looking at the retest here, the retest rally into supply area here, but also into psychological number here of medium wave 4 here. So we're looking for a breakdown to the downside through here. If the 395 becomes the resistance through here, then you can look at those shorts there and look at a nice 3rd wave coming to the downside there. And of course, this will drag the material sector on the local ASX down with it as well. And copper's also got a relationship with the Australian dollar, so that will be the same there as well. They will all move together. And coming on to the currencies here, the US dollar index here. Now, as you know, there's 2 possible counts in the bigger picture for this, and the euro as well. Essentially, a move under the 73.50 area here would create the bearish move for the US dollar, and the bullish move for the euro sitting on support at 144 there. So that's something to look at there. If the 73.50 becomes the resistance, then you can go to the downside on that and up on the euro there. Now, to get a bit closer to that is this 74 here, this number 74 here, just giving it a little bit of time to play out as support or resistance here. Just give it some time, and if it gets support here, then you want to scale in through group 1, subgroup 1, so the 10, the 20 and the 30, and if support is found on the 30, then it will go further to the upside. So you need to work that group 1 there, but support on 10 and then 20, then just wait until support comes in at 30 there, and if it does find support there, can work it up from there. On the downside here, if the 73, 72 becomes the resistance, then you can get in early and move to the downside. You could also get in earlier if you felt that the 74 was actually a resistance. This had done all its swinging and stuff and had finished and it was locked under there, and then it was going to go to the downside. A little bit something like this here. So you'd get something like that, then draw a line under these guys here, and if it moves through that, then go from that point there. Right. So the euro, the mirror opposite here. So we'll be looking at the 144 here, where Fibonacci and Gann meet at this particular 144 number here. It's played a huge part in the euro over a period of time, but it's getting closer to the point where we'll be able to trade this long or short. We already have some positions in long from here, and would be looking to add to those if the euro is going to push to the upside. The interesting thing, though, if the euro does find support on here and does push to the upside, then we'll see the S&P and the Dow and other indices rally from that point as well, because they should follow each other. So really, we should be seeing the euro move to the downside here and the US dollar move to the upside, but they're all on thin ice. So what we could do here is looking at the euro in terms of on the 2-minute chart here, but in terms of the 144 here. Real simple in terms of trading through here. The 144 is a line in the sand, and the bias would need to swing from that. So if this found support on the 144, then you would wait for the 144.10 in this case to find support on here, and you get one position in there, or as many as you like, but first position, second position on here. And if the big if support is found on top of this level here, the 30, then the top of group 1, then you can trade up long from that point there. And to the downside would be the 72 here, the orange line here, that as resistance, but of course you can move in from this here, but you know, the week opening and 1 week closing, 1 week opening, so just give it time to develop here. So locking under the 43.80 there, and you know, I mean really locking under there and under the 72 before you start building any trades there. The Australian dollar here, if I just squash this up a little bit here, what we've been looking at through here is we've also been looking at this market having its rally all the way up through there. I'll just squash this in a bit so we've got it there. The Australian dollar was the one to sort of lead to the upside. We were looking for this to obviously bounce off the trading level 1 here, coming back up to 61.8%, which is just above the 106 there, and we're counting the structure there in terms of the A, the B, and the C in terms of a wave 4 rally. And then we were looking for this to complete and this to move to the downside. So down for wave 1, back for wave 2, and we'll be looking for wave 3, 4 and 5 to move to the downside. A little bit like the indices though, in terms of this market moving to the upside here in terms of wave 2 here. Is this wave 2 complete? And this is what we need to spend a little bit of time on through here. I suppose technically it is complete, and it's quite a nice sort of structure within here, but I'll go that in a minute. But in terms of down for 1 and back for 2, and then we've got the 3rd wave all the way down to here, the 4th wave and the 5th wave to make this up here. But looking at this ABC structure here, it's really quite nice actually in terms of Elliott, in terms of the A, the B and the C wave here. C wave's always got 5 waves in it, so the 1, the 2, the 3, the 4, and the 5. So we should see that work down from here. So any shorting can be done from the 104 here as support or resistance, and using subgroup 1 here. Elliot's fine, but use the levels to trade. So I mean, if this top of group subgroup 1 here, 10, 20, and 30 on here found support here, then you would look to go to the long side there. If this finds resistance through here, then we'll be looking to the downside. So use the 72, but also use the 80 and so forth. So here it is on a 4-minute chart, and I'll just widen that up a little bit here just to have a closer look in here. So this is from the low point here. So we've got the A wave here, the B wave here, and the C wave is quite easily to follow here because we've got up for 1 and back for 2. The nice third wave here, which would have a 5-wave structure in it, the 4th and the 5th here. So what we're looking for here is we're looking for 5 waves to the downside, and we don't have that just yet. What we do have is we have down for 1, back for 2, and down for 3 here. We're looking at wave 4 here on the 104 here, but we haven't seen the 5th wave down here yet. So if we get 1, 2, 3, 4, and 5 come down to here, then we'll get a move back and then down again. So yes, looking for that 5-wave structure there, just squashing that up a little bit there. So we need to see down for 1, back for 2, down for 3, back for 4, and down for 5. If we get that 5 waves here, then we'll get 3 waves back, and then we'll get the next lot down here. But as it stands at the moment, is that it is a corrective wave down through here as an A and a B and a C. So we haven't got that first 5-wave structure down here just yet. So that's why it's important to use the 104 as support and resistance. Okay, well, that's about it, really. Yeah, so just looking back here and looking at the Dow Jones here and our market. I'll just pull this back up here just to recap somewhat. Okay, so what we're looking at here on the Dow Jones on the daily chart is we're looking for this to eventually take out the low through here, and we'll be looking at 5 small waves for it to do that as such, like that, coming into the 10,000 here, which will be the major trading level there. And then we'll be looking for a bounce at that point here. Now the bounce can come back up 61.8% of the move down through here. That's quite possible to come back up to here. But I would imagine that it would come back up to the medium level, the 11,500 that we were talking about. But understand that once this 5-wave structure is complete through here, and the last little 5 waves here that we're dealing with, we get that ABC back up to that point, then we'll be looking for, from the 11.5 here, we'll be looking for a larger 5 waves to the downside. And this will be the place that we'll be looking to short up here in a reasonable sort of manner, but we'll also look at US stocks and US indices to do the shorting from that point, because we feel that as the US debt expands, then the weaker the market will get. Good morning, good luck.